Hi everyone, welcome to another episode of Game of Investing Podcast. Nobody ever got rich working for salary for 20-30 years. But how do we get rich? Well, the formula is something called as the power of leverage. You need to understand a term called leverage and its amplifying power in life to make it big. Now, what is leverage? Leverage is derived from the word lever. Lever is a tool that is used to lift heavy objects. Leverage is a force multiplier or an amplifier you need to bring into your personal finance to make it big or to become rich. Archimedes has famously said, "Give me a lever long enough and a fulcrum on which to place it, and I shall move the world." There are different types of leverage out there. That's what Archimedes has meant. It can even move the world, right? What are different types of leverages or assets that create the power of leverage? Businesses or entrepreneurship. IP rights of books, content, video content, etc., etc. Patents associated with drugs and many other titles. Then there is social media channels or social influencing. Brands, brand equity that creates a lot of leverage. Then there is gold, real estate, investments like stocks, which all has some form of leverage in it. Now, what do you mean by leverage in a very simple term? You need to understand three terms: effort, time, and capital. You put your effort or time into creating something and publishing, or you put your capital into something and investing. All these forms create leverage. When you work for a salary, you only put your effort and time and in return get paid for certain hours, right? But you need to have leverage in other forms as well. Now that is, your income is not one form of leverage, but you need to have other forms of leverage which is going to work for you 24/7 when you're not putting effort or time or capital further into it. Let me explain. Let's take real estate as an example. You put your 20% equity, the remaining 80% is put by the bank. Say $500,000 house. Say 10 years down the line it becomes $1 million. That's a form of leverage because you put only $100,000. You're getting back another $400K after paying off the interest. So net you have 5x your money, 5x times your money. For 100K you're getting now 500K after you sell the house. That's one of the best forms of leverage. Then there is rental yield. It's another form of leverage which you can get it by investing in houses. That's a steady form of leverage. Dividends from stock is form of leverage, right? There are different forms of it. You create a book once and leave it, and the book is going to create money for you when you're not even working for it after that, for the rest of your life. Similar as a patent, similar as a drug discovery. So there are different forms of leverage. You need to have these kind of leverage assets in your investments or ownership with you to become rich. Without that, you're not going to become rich. Let me explain the best form of leverage for you. That is stock market investing in the best companies. I'll explain it with an example. Let's take the stock Nvidia, company Nvidia. Suppose you invested in 2016 in Nvidia, right? Nvidia is known to be great in semiconductor data centers and now in artificial intelligence, right? Gaming and all that. Now, Nvidia had roughly a profit of $500 million or $1 billion in 2016-17 timeframe when you invested. Today, this year, Nvidia is going to generate a profits of $20 billion. So it's a 20x growth of just earnings from the company. No other forms of assets that I spoke about that has leverage can generate a scale and returns like investment in stock market, because no other forms of assets has earnings power like the way companies has earning power. The reason, the companies that you invest in themselves has two other forms of leverage. One is called an operating leverage, another is called a financial leverage. The combination of that is what you get as return on invested capital. Now, operating leverage is nothing but you learn in deep, but it's a form where the company earns more and more revenue. With scale comes economies of scale and operating leverage because more profits flows into the bottom line. That's one form of leverage. Then there is another form of leverage, which is financial leverage, which is very important to understand. Financial leverage is the same real estate example I spoke about, where you put certain amount of percentage of equity and remaining is debt. But look at the way the debt created 5x return for you, right, in a good investment. Same is the case with financial leverage for companies. Companies take debt, say at 4% interest rate or 5%, they can take debt from financial institutions or raise capital from public or private markets. And the average, say, interest is, say, 4 or 5% is cost of capital. And the company is able to generate a return on invested capital, let's say 24-25%. The 20% delta is the returns, which is very critical for the company's growth. because from that returns, the company takes a certain percentage, plow it back to the business to create more products, more services, and then garner more revenues and profits from that. That's precisely what Nvidia did. H100 existed a few years back, which was utilized heavily in data center operations. Then now it's GH200 targeted for the AI, artificial intelligence world. So that is exactly what is happening when companies plow it back. They're put in research and development, and the employees and the company ownership is going to create more products and more sales, and create more profits from that. And again, take the profit. This is a continuous process, and it's a compounding machine. It creates compounding effect because the higher return on invested capital helps the company grow. If you invest in companies that just has higher invested capital, higher returns on invested capital, but no growth, then that's a trap. You need to find companies that can earn higher return on invested capital and has significant growth. Now, trust me, that's the best form of leverage among all other leverages out there. Just wanted to bring this up because it's important to understand how powerful equities are, because that is a compounding process when you have high growth and high returns on invested capital. So invest in assets that can create wealth for you. Just not trade time with the salary. That's not going to create that scale, and you're not going to become rich. So that's a message I want to bring in this episode. Thanks for staying with me. Signing off, Sandeep Anand.